what you may want to include into the bank guarantee, and this is basically going back to the question that we saw in the chat, and special measures to make sure that you can secure the guarantee and it's a good guarantee. You need to make sure that all parties are described: guarantor, beneficiary, applicant, risk, contracts covered. That needs to be specified. There are wider wordings, or if you're covering particular risks, they need to be specified in the bank guarantee. Date, reference number that will be given by the bank. Amount, you need to discuss with your counterparty what is the cap, very important for the bank, because this is the amount that they will book against your facility, trade finance facility that they granted to you. So you will be utilizing your capacity for that amount. Tenor, expiry date, expiry event. So when we're talking expiry events, make sure that you can confirm the event by a document, because remember, banks working with documents. Terms and conditions for demand and demand wording. So it's a very good idea to include into the bank guarantee a demand wording, just to make sure that everybody knows what to write to the bank, and to ensure that everything in the demand wording you can do. Supporting documents for demand. Some people include into the bank guarantees that are on first demand some wording. Then it's not strictly kind of a it's becoming more documentary, but there could be the documents. I saw these bank guarantees with some documents to be attached to the demand, not only merely a statement, because the beauty of the simple on-demand guarantee, that you're just making a statement that your counterparty didn't pay, and you basically promise that you're not lying, and so then the bank will pay. So place, form of presentation. I saw a lot of bank guarantees that actually people forget to mention where they bring the documents, and then there's a lot of frustration about that. Parties responsible for paying charges, very rarely see in the bank guarantees, but this is a good way, because there could be some charges imposed by two banks cooperating if you claim, and then there could be actually arguments who is paying what. Rules and laws. Remember, we spoke about rules and laws previously, to make sure that you are including both rules and laws, but remember that some rules are incompatible with some laws in some jurisdiction. Question to think, and again, so I'm asking this question because I saw a lot of bank guarantees that cross-reference some clauses of commercial contracts into the instrument wording. It means, for example, so they say the bank guarantee covers all risks and obligations under the contract number XYZ, dated XYZ, as per clauses 8.2, 11.1, 15.7, full stop. But the bank does not know what are these clauses. The bank is not privy to the commercial agreement. So referencing the clauses into the bank guarantee is very bad practice. If you want something from your commercial contract to be part of the bank guarantee, you need literally copy paste